When investors think about artificial intelligence, they often think about companies like NVIDIA. But NVIDIA is only one part of a much larger ecosystem. Semiconductors sit at the heart of some of the biggest investment themes of the next decade. Artificial intelligence, cloud computing, automation, robotics, electric vehicles, digital transformation. In many ways, semiconductors have become the modern economy's equivalent of oil. Almost every major technological trend relies upon them. And that raises an important question. When is the best time to invest in semiconductor stocks? To answer that, we're going to look at the semiconductor sector as a whole before comparing some of the industry's biggest names. Now, one mistake that investors often make is treating all semiconductor companies as if they were the same. In reality, they occupy very different parts of the value chain. For example, NVIDIA designs advanced AI processors. AMD, for instance, competes in high performance computing. TSMC, the Taiwan semiconductor manufacturing company, manufactures chips for many of the world's largest technology firms. And ASML, a Dutch firm, supplies the extreme ultraviolet lithography machines that are required to produce the most advanced semiconductors. With a lithography machine, some of them can cost upward of $200 million. They take years to build, and they're essentially a high-end photocopier for electronic circuits. Very advanced, very tiny tolerances. So a very advanced piece of equipment. Now, together, these companies form a global ecosystem, and understanding that ecosystem can help investors appreciate why the sector remains so important. So before looking at the individual companies, let's look at this ETF for VanEck Semiconductors as an ETF. The chart below here shows the seasonal behavior of the semiconductor sector using a broad semiconductor ETF as a proxy. I'm using the VanEck Vectors Semiconductor ETF. So that gives us an important starting point. Rather than focus on a single company, we can first identify whether there are periods when the sector as a whole has historically performed better or worse. Now, I'm using the D-trend function here, which, when you have the D-trend function off, you can see the overarching trend it has just been up for semiconductors. When you use the detrending feature, it allows for that overarching trend. So it makes it a little bit easier to find pockets of seasonal strength or weakness. And straight away, we see some interesting things. So first of all, early January, we see a nice uptick in semiconductors investment as a whole. Middle of February, we see this dip from middle of February down to April, average fall of 3.37% for the ETF, followed by a pickup in the second quarter. You can see here as we head into early May through to the end of July, you've got an average return of 16.04%. You then have a summer slump into the end of October with an average return that's still healthy, 2.25%, and then decent performance into the end of the year, average return 7.66%. Now, that's the sector as a whole, but no discussion of semiconductors would be complete without talking about NVIDIA. NVIDIA has become the dominant name in AI infrastructure thanks to its leadership in graphics processing units and AI accelerators. It's a US company, and the chart here shows NVIDIA's seasonal profile. Again, I've de-trended the seasonal data so we can see these pockets more easily. And investors can compare, NVIDIA's behavior against the broader semiconductor sector to see whether it tends to move in line with the industry or display unique seasonal characteristics. And straight away, we do see a very similar pattern, don't we? We look January, February, average return 15.71%. Middle of February into the end of April, negative return 2.63%. Then from April through to the end of July, average return 32.11%, followed by that summer slump into the end of October with a still decent return, 8.77%, but there are some outsized losses in 2018 and 2022. So, you can see that if there's a period of weakness, then NVIDIA is vulnerable during those summer slump months. And then into the end of the year, we do notice a slight difference here. Average return 4.92%. But if we compare to the broad ETF, if we just have a look here, we can use Seasonax's comparing feature. We do see an interesting difference at the end of the year. You can see here there's that early uptick in November, but notice how the broad sector seems to stay resilient, whereas NVIDIA here in the yellow line just shows a little bit more weakness at the end of the year. The actual average returns, you see for NVIDIA, are actually negative into the end of the year, with the average returns for the sector as a whole is positive. Now, the next individual stock to look at, another US company, TSMC. Now, the Taiwan semiconductor manufacturing company does occupy quite a different position to NVIDIA. Rather than designing chips, TSMC manufactures them. And many of the world's leading semiconductor firms rely on TSMC's advanced manufacturing capabilities. And the chart here shows TSMC's seasonal profile. So let's compare this seasonal profile of TSMC again to the broad sector. If you just take a look here, we detrend the data, makes it easier to manage. We'll go back and take NVIDIA off our comparison chart, and we'll now apply TSMC as we compare the broad sector. Let's just make sure we've got the right ticker. There we go. And straight away you can see that TSMC is very similar to the overall index. We have this nice seasonal upside, average return 5.56% for the sector at the start of the year, 8.03% for TSMC. We then have this period of weakness from February into April. TSMC falling on average 7.77%. Maximum loss is quite similar. The broad index 25.44%. Maximum loss for TSMC 26.51. Summer slump again shows a period of weakness. Very, very similar. Average returns quite similar. Maximum losses slightly higher for the TSMC. So again, just like with NVIDIA, we're seeing that there is a period, if there's going to be a period of weakness for semiconductors, you can see outsized losses in those summer months and then a very similar end of the year. So if you just go and have a look at TSMC itself on the seasonal chart, we can see here the historical maximum drops, and we can see in 2018, 2022 and 2023 we've seen falls of over 10% and over 15% in 2022. So the summer period is a potential time of weakness for TSMC, and if you're going to see outsized drops, then any dips could be worth buying in that summer month if you're looking to get into the broader picture. Now, AMD, another US company, right, gives investors a different perspective again on the sector. Now, while AMD competes directly with NVIDIA in several areas, it does often follow its own path due to differences in product cycles, market positioning, and investor expectations. And the chart here shows AMD's seasonal profile. Notice again, we've got this same broad picture of strength into the start of the year. Average positive return 3.95%. A drop mid-February into the end of April, negative 4.15%. Then a lift into Q2, average return 28.99%. Some pretty volatile moves, notice. Like, even though the gains are quite high, look at the maximum drops. 22, 10, 18, 10%. So it's not for the faint-hearted, very volatile stocks, semiconductors. And you can see here the summer slump, again, negative return 1.69%, followed by a end of year pickup. Let's see how it fares into the end of the year. Again, average return 13.27%. Notice two deep drops, 20%, 22.26% in 2024, 2025. So broadly speaking, that's quite similar to the semiconductor ETF. And if we just want to compare it again, we can pop AMD here, and we can apply it. Remember, we can apply more than one instrument. So if we wanted to compare AMD and NVIDIA, right, we're able to put both of those comparisons on the chart. You can see the color here corresponds. And again, if we just take off NVIDIA now, because we just want to look at AMD, you can see very similar pattern to the broad sector. Now, ASML may be less familiar for some investors, and it's the only non-US company, Dutch company, but it occupies one of the most strategic positions in the entire semiconductor industry. Its lithography systems are essential for producing advanced chips. And the lithography machines, costing many hundreds of millions of dollars, are essential for producing the world's most advanced chips. And without ASML's cutting edge systems, the leading edge semiconductors powering today's AI revolution just simply could not be manufactured. These lithography machines are full of high-end photocopiers that are extremely accurate, down to sort of nanometers, incredibly small and detailed circuitry that these lithography machines are able to produce, right? And this also adds a European dimension to our analysis and broadens the geographic perspective. Now, if you look here, January to middle of Feb, right, again, we see that early strength. But one thing that is quite noticeable, slightly more resilient in that drop with an average return 0.13%, but outsized falls. Then the gains tend to be a little bit sooner. They don't tend to run as far as July, so that sort of hot seasonal period goes from end of April to start of June, average return 7.74%. But if you sort of put that into the end of June, you can see it's not so strong, 5.86%. And then the summer slump has this little tick up for July, right? 4.77% average return. It's been quite good and let down the last 3 years. And then the summer slump comes in again, quite marked, quite pronounced, 3.08%. So there are some slight nuances here with ASML compared to some of the other semiconductor names. You can tend to see that the gains end of April into the end of July, gains end of April into the end of July, gains TSMC, right, end of April into July. It's the Taiwan semiconductor manufacturing company. And with ASML, those gains sort of tail off, not quite the same move up into July. So, we could start putting all these companies together. AMD, let's add NVIDIA. Let's add ASML. let's add TSMC. And one thing that's worth mentioning about the company TSMC is Taiwan sits in a politically contested region, and this company itself, right, is based in Taiwan, and it's very, very important strategically from a geopolitical perspective because China considers Taiwan part of its territory. And if tensions were ever to escalate into a conflict or blockade, then TSMC's operations could be severely disrupted. And TSMC, it manufactures chips for Apple, NVIDIA, AMD, Qualcomm, and many others. So a disruption here wouldn't just affect TSMC, it would ripple through the entire global technology industry. So little correction here that TSMC is not a US-based company. AMD, NVIDIA are ASML Dutch. TSMC is Taiwanese. And some analysts argue that Taiwan's dominance in advanced chip manufacturing actually protects it because the economic consequences would be so severe for the US, Europe, Japan, and others that there's a strong global interest in Taiwan's stability. So just remember there's a geopolitical angle there. Now, just notice looking across the sector here, and if you look at all these companies together, do semiconductor stocks tend to move together? The answer is generally yes, right? Are there periods where the sector shows broad strength? Yes, look, from the end of April through to July tends to be, a strong period. And you can see here, look, the average returns, double digit in almost all of the stocks apart from ASML. And look at some of those maximum gains, huge. So straight away you can see, look, the sector as a whole does well, and that filters through all the other stocks. And if you then look at sort of this period coming up to, summer, the average returns, when they're positive, they're much milder. But you can straight away see, look, it makes much more sense to invest in semiconductor stock end of April than it does in the summer months. That can produce decent dip buying opportunities. Look at those maximum losses, 30%, 20%, 26, 28, 28%. So those maximum losses can provide good dip buying opportunities potentially into the end of the year, where you can see from end of October through to end of December, average returns are 8, 12, 5, 7, 7, including the sector and the other stocks. And again, the start of the year tends to be strong. So from end of October through to early Jan is a strong period. It's a weak period from middle of February, end of April, and then the strongest period of the year tends to be end of April through to the end of July. So seasonality, obviously, look, it cannot predict the future, but it can help investors identify periods where historical probabilities have been more favorable. And one of the most important lessons from this analysis is that semiconductors, they're not a single investment. Investors can gain exposure through designers, such as NVIDIA and AMD, manufacturers, such as TSMC, don't forget that Taiwan element to it, equipment providers, such as ASML, right? Or exposure to broad semiconductors via an ETF with the seasonal trend of VanEck Vectors Semiconductors. Each offers different exposures to the same long-term trend. So when it comes to investing in semiconductors, perhaps the most important question is not whether the sector has a future. The long-term demand does appear firmly in place. The more interesting question is which part of the semiconductor ecosystem offers the most attractive opportunities, and when does history suggest those opportunities are most likely to emerge? And while nobody can predict the future, seasonality can really help investors add another layer of analysis to one of the world's most important industries. And you can see here this end of the April to the end of July is one of the strongest seasonal periods for semiconductor investment. Certainly has been over the last 10 years. Remember, don't just trade it, Seasonax it.